Welcome back to Hey Eric series, Ask Your Realtor. Today I wanted to dive into a question I recently got of how much money should I use for a down payment? So a lot of times the conventional wisdom is 80-20. So 20% down, you get 80% loan to value. That's very conventional wisdom, kind of old school. Now there's a lot of different loan products that people use that they buy houses with. When you're talking about investments, it's always 80-20, or sometimes it's even 25% down. So it's 75% loan to value. Right now with FHA, typically your FHA down payment is 3.5%. That can be changed. A VA, a lot of times you can have 0% down. There are conventional loans. You know, a typical conventional loan is maybe 5%, anywhere between, well, a 20% loan is a conventional loan, but there's different versions of that where maybe you just put 5% down or 10% down. And then there are other loans like Utah Housing where you basically do 0% down and it's like two different loans. What's best for you? Obviously it depends on your situation. The more money you put down, the more it's gonna improve your interest rate typically, and it's gonna lower your monthly payment because you're paying for the house with cash or part of it, and so you're not having to finance as much. If you finance 100% of your home, that's a lot of risk to your lender or to a bank, and especially if that's split up between two loans, you're gonna have a higher interest rate. And if it's two loans, typically that smaller one is a much higher interest rate, and your primary loan is like the market rate, say 6.5 or 7 right now. You know, when we talk about how much you should put down, you know, you want to look at your own budget, your financials, how much have you been saving? And one thing to note, you know, if you do have like a retirement account, a 401k, you can usually pull money from that if you're a first-time home buyer as a cash down payment. That's what I did. That's how I bought my first home. Additionally, there are grants and programs. It depends on where you live and if you qualify for them. A lot of them are income restricted, but they are available. Lastly, I'd say when you decide on a down payment, make sure you still have some cash in reserves as like an emergency. Don't put all of your cash into your down payment. Still have that emergency fund, so if something does happen, you can make your payment for 3 to 6 months. You can afford groceries for 3 to 6 months. You can pay your car payment for 3 to 6 months. Emergency funds are very important, so don't take out your emergency fund to buy a house. I hope this helps. If you have any questions, feel free to reach out, schedule a call with me at the link below. Thanks.